Hey there everyone, Dave Keller here with Market Misbehavior. Today we're going to talk about what's next for the QQQ. So I love to do this sort of choose your own adventure style video where we talk about a particular market like the S&P, the Nasdaq 100. We've done it on Bitcoin, even individual stocks like Tesla and others. Let's think about the trends and the momentum, all the different technical characteristics, and think about 4 different potential future paths. Now, this is an exercise in what's called probabilistic analysis, where instead of focusing on one particular investment thesis and trying to ignore any other possibilities, you force yourself out of your comfort zone and think about different scenarios, a very bullish, a mildly bearish, and a super bearish scenario. And by forcing yourself to think about those 4 different scenarios, think about what that might look like for your portfolio, for the broader market as a whole, and then think about how you would manage risk or identify opportunities in those environments. That just helps you to be less surprised when one of those scenarios actually played out. Now, we actually did this particular exercise with the QQQ back in July, and I have a link in the description if you want to check that one out. It was back around here on the chart of the Nasdaq 100. We talked about 4 potential future paths. And at the end of the day, it was kind of scenario 2, the mildly bearish scenario that played out. And the reason why that was key was we talked about that 38.2% retracement and holding that level, and that actually held out just fine here in October. So overall, that's been sort of our general framework from June through now. Let's up your July. Now let's update it for what we're seeing here in November 2023. Before we get to the charts, couple quick thoughts. First off, I would so appreciate if you would like this video. It would help me a great deal. Also, why not subscribe to this channel, get some other great thought-provoking technical and behavioral content next time you're on YouTube. Before we get to the chart of the QQQ and those 4 different scenarios, here's one other thing I'd like you to think about. Today's video is brought to you by Seeking Alpha. I'm a big fan of places that allow you to better understand the market environment. I think seekingalpha.com is certainly one of those. When you go to the website, I would check out the stock screener, particularly because it allows you to use Seeking Alpha's proprietary quant model. In my experience working with institutional investors, we always had what's called an alpha model or a quantitative model, which really modeled the characteristics of strong companies, demonstrating strong growth prospects and strong price momentum. Seeking Alpha does a really good job of taking that institutional level quantitative capability and putting it in the hands of individual investors. If you go to marketmisbehavior.com/seeking alpha or just click on the link in the description below, you can go right to a special offer. If you use the link, you get $50 off your first year and also get a 7-day free trial to check everything out. So go to marketmisbehavior.com/seeking alpha. Now back to the video. All right, so here's my chart of the Nasdaq 100, the QQQ. We're updating this as of November 2023. And the general exercise here is to think about 4 potential scenarios looking forward, maybe the next 6 to 8 weeks. That would actually take us right into the middle of January, so kind of right into the beginning of the new year. Now, things to think about as we're going through these different scenarios. The seasonality in November, December actually tends to be quite strong. So it's not a real surprise that we had a major market low for now in October. Not much of a surprise we've seen extreme strength in November. Seasonality would tell you that's certainly the case, and usually ends up being pretty strong into the end of the year. We get into the beginning of next year, all of those things that are sort of pushed down the road a little bit probably come right back up. Thinking about the interest rate environment, the state of the dollar, commodity prices, all these other things. Expectations for the Fed. We'll have another Fed meeting in mid-December. Maybe that adds some color to this overall analysis. But what you have to think about are each of these 4 scenarios. And what I'm going to ask you to do is listen to the 4 scenarios, look at the chart, leave a comment below, and vote. Which of these scenarios do you see as most likely and why? Look at how other people are describing this. Look at the different votes that you see on there and what sort of inputs, what sort of evidence they are using to back up their particular thesis. Then come back to this video after the holidays, the beginning of next year. See what actually played out. See how this probabilistic analysis maybe better prepared you for whatever comes in the next 6 to 8 weeks. Let's get to the 4 different scenarios. The first one is the super bullish scenario. Now, this scenario, I think, if we're looking at mid-November of 2023, we're just below 390 a share for the QQQ. The super bullish scenario is quite simply is a break to new all-time highs. We have to eclipse the November 2021 highs, which is right around 400. So I would say the super bullish scenario involves the QQQ going above 400 and not stopping. We literally go above the all-time high. We push into the low 400s. We have a strong run driven by growth stocks. So it would have to be the mega cap growth names like Microsoft, Apple, Amazon, Nvidia type of stocks, Meta, and others to really propel the market, our growth-oriented benchmarks like the QQQ, to new all-time highs. And to sustain those gains, it's going to have to really be a consistent push of higher highs and higher lows. So the current levels that we're at should be well in the rearview mirror in this super bullish scenario. We break above 400, we continue on. So bullish scenario, super bullish scenario. Scenario number one means we finish the next 6 to 8 weeks above 400. We make new all-time highs going into the beginning of 2024. Scenario two, the mildly bullish scenario. In this case, we probably don't get to new all-time highs, and maybe we briefly do, but we spend most of our time within this range between about 380 to 400. And the reason why 380 is an important level in scenario number two is because that was this gap here. Now, not all stocks have a gap in the last couple weeks, but in early November, the QQQ actually gapped higher. I think this was around the CPI number. The October CPI number came out lower than expected, sort of confirmed, solidified the thesis that the Fed was done raising rates. Zero chance of the Fed raising rates in December after that point. And certainly the timeline of Fed rate lowering in 2024 became shorter, actually brought that the light at the end of the tunnel, as it were, a little bit closer. So the mildly bullish scenario would involve remaining above that crucial price gap, which means we hold 380, but we don't really get to new all-time highs. We sort of stay into this range. Pretty possible scenario. What this would mean is that growth stocks probably are still holding up. They're maybe not blowing out to the upside, and a lot of other stocks are still struggling quite a bit. Look at the year-to-date returns on the average stock. Still not particularly good, right? The equal-weighted S&P, the small-cap index, still kind of flat year-to-date. So that would have to persist. There just isn't enough of a broad advance between now and the end of the year to propel the QQQ above the all-time high in November of 2021, just about $400 a share. That brings us to scenario three, the mildly bearish scenario. In this case, that gap that we mentioned, that 380 level, does not hold. So the difference between scenario two, mildly bullish, scenario three, mildly bearish, is in scenario three, we fail to hold 380, but we hold the October 23 low, which gives you a range around 345 to 380. That would mean that these growth stocks like Nvidia and Microsoft and Apple and others that are testing resistance really don't get much above their summer highs. They actually fail a little bit. Maybe interest rates actually push back up a little bit, which really provides a headwind for that growth trade. Maybe defensive sectors like utilities, real estate, consumer staples actually start to pop up a little bit. And it's more of a choppy backing and filling kind of fourth quarter. We've had the run in November. December actually is unseasonably weak as we retrace back into this range. And by the beginning of the next year, we're all talking about whether there's going to be enough of an upside catalyst still to push things like the QQQ and the S&P 500 above their 2023 highs. This brings us to the super bearish scenario, scenario number four. This, of course, as you could probably guess, involves breaking below 345. That super bearish scenario means not only do we fail to hold this gap, we really distribute. This would, of course, fight against everything you know about seasonality. The seasonal trends that have played well in 2023 essentially go out the door. December ends up being quite weak. There are a lot of question marks about the Goldilocks scenario, a soft landing, maybe indicators suggesting a deeper recession, less of a soft landing. All of a sudden, happen. Maybe economic data heats up very quickly, and as we go through December, the Fed all of a sudden is ill-equipped to handle risk assets that start rotating lower because they basically telegraphed their intention to not raise rates any further. Once it's seen that they're more impotent in terms of their ability to stave the downside decline, stocks really start to sell off. And at the beginning of 2024, we're talking about the QQQ underneath the October low and questioning whether we retest the 2022 lows. That would be a very real scenario. And so the very bearish scenario number 4 is basically the full-on recession, which again has been described as fairly unlikely, but economic data comes in a little hotter. All of a sudden the signs are stocks start to fail, growth stocks fail to get to new highs, and all of a sudden selling begets further selling, and we really push below QQQ 345. Those are your 4 scenarios. The super bullish scenario, which means they push to new all-time highs above the 400 level. Scenario 2, the mildly bullish scenario, which means we hold the gap around 380, but we don't really make it to new highs above 400. Scenario 3, the mildly bearish scenario, means we do not hold that gap around 380, but we hold the October 23 lows around 345, and we end up in this range, just continuing the range that we've been in the last 6 months or so. Scenario 4, the very bearish scenario, we actually sell off aggressively in the next 6 to 8 weeks. We fail to hold the October low from this year and actually make a new swing low going into the beginning of next year. Which of those 4 scenarios do you see as most likely and why? Don't forget to drop a comment below. Let me know which scenario you select and why. And I would encourage you, once you vote, look at some of those other comments as well. See what sort of insights, see what sort of inputs others are using. What evidence are they using to back up their decision? Don't forget to come back to this video after the holidays, see what actually played out. And this, again, is an exercise in what's called probabilistic analysis. For Market Misbehavior, I'm Dave Keller. Have a fantastic Thanksgiving holiday. We'll see you again really soon.